Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, welcome back. You're listening to The Blockchain Show. I'm your host, Ethan Kinderknecht. Today, I've got a guest from almost the other side of the planet, where he's nearly a day ahead of me. I'm here with Jon Deane. Jon, how are you doing today?
Good, Ethan. Thanks for having us on the show.
Yeah, my pleasure. Yeah, it's great to talk to you. I always, enjoy talking to people from your area of the world, which is
the Eastern Australia. So on the eastern seaboard here in Sydney.
The Perth Mint is what we're talking about today, specifically the Perth Mint Gold token. So I understand that there's, a lot of directions we can take this conversation, but before we get into the specifics of what you're working on and, how blockchain ties into that, tell us a little bit about yourself and how you came to be involved with the blockchain and also the PMGT.
Yeah, sure. So my, experience 10 to 15 years has been across the commodity trading space. I worked in investment banks between London and Singapore, managing vanilla exotic trading businesses predominantly focused on commodities. We looked at a lot of things based out of Asia, across different regional, different jurisdictions in the commodity space. And, when the blockchain first started coming out and a much more wider space than that, just technology advancements in commodities was trying to accelerate. It seemed like there were a number of inefficiencies that could be improved, leveraging different types of technologies, and blockchain was definitely one of them. And when I moved back to Australia, I started looking at it more in depth and got involved with an institute based in Australia called the CMCRC, which is the Capital Markets Cooperative Research Institute, which is a government-funded, university-funded and privately funded research institute into improving financial markets as well as health technology. And they've had, a number of different successes over the years. Probably the most notable success has been a company called Smarts, which is the leading market surveillance solution in the world and was eventually sold to NASDAQ in, I think, early 2012 or 2013. And anyway, they had been looking at blockchain. They've been looking at both central as well as decentralized ledger solutions for both fiat currencies as well as commodities. And they had started a business called InfiniGold, which had started working with the Perth Mint around creating a digital gold solution on a central ledger basis, which enabled people to transact directly with the Perth Mint via an application. They could buy, sell the gold, they could redeem it for physical, and they could also transfer it peer-to-peer. And what was really interesting about this technology, it actually was built and, incubated by a company prior to that, which was also under the CMCRC called DigiCash, which you may or may not have heard of. But DigiCash had developed some technology under a gentleman called David Schwam, who was effectively a central ledger, cryptographically secured, and for lack of a better word, effectively a token, but what we generally call a digital certificate these days, because obviously a token is often associated with the blockchain. So, these guys, InfiniGold, had started looking at this. I got very interested in the company and started sort of working with them on an ad hoc basis. And eventually I was asked to come on as CEO and sort of take it to the next level. And then, a lot of different things sort of happened in between, which we can elaborate on later.
A very good perspective. You bring up something that, it's maybe some terms that our audience is not familiar with. Was it DigiGold or DigiCash?
DigiCash.
Right.
Yeah, DigiCash was quite well known. It's still operating. We actually have a perpetual right over their technology, like their patented technology. But if you know who David Schwam is, he's highly credited with developing the cryptography that underpins a lot of these digital certificates. And DigiCash built the technology originally for the Reserve Bank of Australia, so the Federal Reserve equivalent in Australia. and under their approval to create a digital currency on a centralised ledger, but in all looks and purposes effectively a token, to digitise upwards of 10 million Australian dollars. Now, they didn't end up doing all 10 million. They did digitise some, but it was really, as I come back to the research institute, the whole concept was around identifying whether there was an opportunity to create digital currency, which is actually quite a topical thing right now because it was well before its time. This is really before blockchain hype. And, if you look at what's happening with COVID-19, contactless payments, even the ability for governments to distribute fiat currency as a way to stimulate the economy, there's a real lag in that payment process. And, obviously looking at a way where governments could literally airdrop currency into people's digital wallets would be a much more efficient and faster way to stimulate economies when you have situations like the pandemic. On top of that, obviously physical cash is, got all different types of attributes, but one of the biggest ones is it can transmit potential diseases. So, I think digital currencies are going to be becoming much more in vogue. And what DigiCash was originally trying to do, and its original technology, which we now use with the Perth Mint, was kind of revolutionary, but it probably, timing is everything at the end of the day.
You're right. And it brings up the whole idea of money, which is a central theme of this podcast, obviously, Bitcoin being the first use case for the blockchain. Satoshi Nakamoto's white paper is pretty ahead of its time, sending money over the internet. It took us almost 20 years after the internet was invented. A little bit longer, actually, maybe almost 30 years. When was the internet invented? 1989?
Yeah, maybe even more, I think.
Somewhere around there. You could send messages to each other, but, internet cash was almost too far-fetched for a lot of people until Bitcoin came along. So anyways, just to get back on track here, I've seen more people buying, like people that I know have been talking about buying gold and silver, and which to me seems like a step backwards until I really thought about it. And, this is a crazy time around the world. There is a lot of trust issues within governments and within banking institutions. It makes sense to me why people would want to put their money in hard currencies or, physical currencies. There's all sorts of problems associated with that. Obviously, someone could steal your gold, or if you want to buy gold somewhere else in a vault, you have to pay the processing fees. I'm sure you could educate us on maybe the traditional ways of buying and selling gold and how you guys are kind of revolutionizing that, if you wouldn't mind.
Maybe I'll just start back where you began this question, Ethan, and you look at something like Bitcoin, right? And Satoshi Nakamoto's white paper. So you are right. It is effectively an internet currency. Gold, obviously, historically has proven to be a form of currency as well as a store of value, and it's sort of flipped between the two over different centuries. Obviously, in the last sort of 30 years, pretty much actually the last 50 years, I should say, it has predominantly been a store of value in the Western world and maybe used as a currency in some more developing country nations. Bitcoin obviously came out as this ability for fractional currency to exist, for the control of supply to be maintained. You can't have a central body who is printing and inflating or deflating supply to influence the underlying economic conditions. But on top of that, you couldn't effectively devalue the currency by a central body. Gold obviously contains the exact same attributes as Bitcoin in the fact that the supply is steady. And I'm sure a lot of your listeners have read books like The Bitcoin Standard and can understand that, despite the fact that there is obviously mining of gold, the overall impact of mining of gold is very, very little on the overall circulating supply. So gold, in its essence, its biggest hurdle was the fact that it couldn't be fractionalized, one. And two, you mentioned before about it being stolen. It wasn't really that portable, right? I mean, you didn't really want to have, your Brinks truck full of gold driving over the border if you had to get out of your country. And that created lots of different hurdles for gold to be adopted as a modern currency, in my opinion. However, interesting enough, technologies like Gold Pass, which is the technology that underpins our token, Perth Mint Gold Token, PMGT, obviously have enabled a lot of those issues to be eradicated. So, i.e., you can now buy a coffee with a PMGT. You could, take in your wallet a fractional component of gold. You can, go between countries. You can you can send gold peer to peer without creating any increased operational or potential theft risk, right? I mean, that you don't actually need to take it out of the vault. So the solution that's been created by the blockchain, as well as even some centralized solutions, which are cryptographically secure, have enabled a lot of that. Coming back to, I guess, where you're getting to at the end is why are people nervous and why are people buying gold or Bitcoin or silver? It's because of what's happening around coronavirus, but coronavirus is actually just the pin that popped the bubble. And it's been, we've been really going through this cycle since 1991. 1991, we had a commercial real estate, over-leveraged situation, which was bailed out. Obviously, 99 dot-com crash, which was also over-leveraged, bailed out. 08, we had another over-leveraged in residential real estate, which was also bailed out. And every time we're bailing out these industries or sectors, what's happening is the government, in theory, is taking that leverage out of the system, so absorbing that over-leverage, but that effectively turns out to be debt that is meant to be pushed back onto the private sector over time. But what we did was we never pushed that debt back onto the private sector. So, in 2012, we obviously had the sovereign crisis in Greece. Similar story there. We're continually absorbing more and more debt on sovereign balance sheets. And we're obviously in a situation now where, our debt to GDP is at astronomical high levels. And then we coupled that with 10 years of QE and low interest rates. So we encourage the private sector to also borrow and adopt a similar, process that the sovereigns have been approaching. And so you saw record share buybacks, record corporate debt levels to GDP developing in the market. So when the pin, being coronavirus, popped this, what I would envision is like asset bubble in global markets by, having record unemployment, obviously in the US around 20%. GDP, I think, was recorded down 4.5% overnight. Then you're getting in this scenario where government's only response, because you have record low interest rates and, monetary policy obviously is at zero when you have record low interest rates and record debt levels, that you don't have a lever being monetary policy to drop interest rates really that much further, right? And you can't raise interest rates because of the amount of debt on corporate and as well as sovereign balance sheets. It's a negative impact on GDP. So you're only left with really fiscal or quantitative easing, which is really just printing more money. And when we print more money, what we're doing is we're increasing the supply of money. So whether you're looking at US dollars or Aussie dollars down here in Australia or Sing dollars, Hong Kong, British pounds, whatever, as a collective, as a basket of currencies, they're being devalued versus real world assets. US dollar may go up versus the Aussie dollar may go down versus the sterling. Doesn't matter. What is happening is the basket of all those currencies versus real world assets, whether it's real estate, whether it's equities or hard products like gold or silver or Bitcoin, which can't be printed, is being devalued. So then the next question for a lot of investors is, well, do I want to be in real estate when we have 20% unemployment? Do I want to be in equities when GDP is falling off a cliff? And the short answer is probably no. And that's where I think you're seeing a lot of demand shifting to stores of value, i.e. like silver and gold. Lastly, I'll just one other factor into this, which isn't often talked about because a lot of people comment on fiscal and monetary as well as QE stimulus. But the other big impact of coronavirus or COVID-19 is globally we're seeing, prior to the virus, obviously we were seeing a big shift in populist politics, with a lot more back toward nationalist type approaches. Obviously, in the US-China trade wars, what was going on. On top of that, coronavirus is going to encourage the shift to manufacturing, I believe, back to local locations, but that has an inflationary impact. One being that you're going to drive costs higher. Obviously, China has more than likely been, for the last 25 years, the deflationary impact that overhung on all of this stimulus that we witnessed, right? So all of this free cash that was floating around in society from pretty much the dot-com bubble to today, we never really saw inflation. And a lot of people talk about technology overhang and what technology did to deflate. But reality is China was offering effectively Western products, but with developing nation labour costs. And that has a huge deflationary factor onto it. So if we start to take that deflationary factor out of the market and we start to see inflation start to tick back, particularly when we're at record debt levels, where they don't have that ability to control inflation through products like monetary policy, then it's a really big bullish signal for stores of value. So Bitcoin, gold, silver, platinum, anything which is obviously historically proven itself. Bitcoin, in my opinion, I don't think it's proven itself yet to be a store of value. I do think it will, but time will tell, and we still need to see real money come into the space and demonstrate that they recognise that Bitcoin has the same attributes as gold and silver, and that's why we think that these markets could go materially higher.
There's a economist by the name of Peter Schiff who predicted the 2008 housing crisis in America that I think was felt pretty much worldwide, and he came out against Bitcoin saying it wasn't a currency, it was like a digital asset, And I'm inclined to believe with him. I think that it was the first. It was kind of sometimes I wonder if it's going to be like the MySpace of social media. Then came along Facebook, but Bitcoin is still here. It's survived this far. So definitely, it's probably like the biggest brand of any cryptocurrencies. Wow, there's a lot there. What you said was very, very profound. I think that I can't think of a time like this in history that we've seen such changes happen so quickly with such long-lasting implications. Let me go back. There was something you mentioned, deflation, and we were talking a little bit about hyperinflation a few podcasts back, and specifically we're talking about the $2.2 trillion that the United States Treasury was giving out to its citizens, and whether or not that was just to help the rich get their money out of the stock market, or was it really there to help the the working class, some of the unemployed? It just seems like we're in this for a long time. They were talking about 18 months where we might have to be slowly shutting things down. I mean, I don't know. People here still have maybe a little bit of their money left from their stimulus checks, but it was not that much money if we're thinking about it. If someone were to lose their job, $1,200, that's not even really rent for a lot of places around here. Maybe like a one-person apartment. But I'm just kind of thinking about what you were saying and comparing it historically. Have we ever seen anything like this? And you mentioned the store of value and how people might be putting their money there instead. What are some of the implications of this whole thing?
Yeah, so there's a fantastic chart that shows asset prices, effectively the stock market versus forward company earnings. Okay, so effectively looking forward on price PE ratios. And this chart historically always tracks pretty close, right? I.e., the equity market should be a reflection of what forward earnings will be. And this comes back to your comment around the 2.2 trillion of stimulus. The reality is that chart has diverged dramatically, right? So in my opinion, what's happened here is that potentially capitalism is dead, or the capitalism model that we have used for the last, pretty much since the early 80s, has fallen out of bed, and we haven't seen the bankruptcies that you would expect when you have 20% unemployment and GDP effectively falling off a cliff. So it is a very abnormal time when markets or asset prices are diverging from what they should traditionally track, which is one, I think, quite a concerning factor, right? It doesn't mean that asset prices couldn't go higher, and that comes back to the 2.2 trillion stimulus that we've witnessed, which is, you got to understand, that is unprecedented. In QE2, when they proposed a 600 billion stimulus package, it was highly controversial. Everyone was talking about hyperinflation then. This recent stimulus package, they're doing 500 billion a week. I mean, it's not that many years later that you're doing 500 billion a week, and the previous stimulus package in QE2, right, of 600 billion was highly controversial, like it nearly didn't get through. So I think we're living in I guess, a new environment and an unprecedented sort of economic situation when the levers of government have been, over the last 30 years, further and further restricted, that they've had to adopt further and further less conventional methods to smooth economic cycles. And obviously this cycle we could have let fall off a cliff and seen, the economy really go into a hole. And, you understand if asset prices, say real estate or equity markets halved, the impact on employment would be dramatically worse than what it currently is. So I think what they've done is they've probably just kicked the can down the road, but I don't think the can's gone that far down the road, would be my analysis of where we're at. And, if we continue down this current track, how does it look going forward? Well, you could see a world where, central banks become less independent. They emerge closer with the federal government. And central banks or monetary and fiscal policy are nearly aligned. One. Two, I think it's realistic to assume that, with processes like what the Federal Reserve's been doing with buying up corporate bonds, junk bonds through these SPVs, which is, you could argue, is against the letter of the law for what the Federal Reserve is allowed to do, has broken capitalism and has enabled companies to survive that should be bankrupt and across sectors. So does that mean that the models we used historically are now broken and we can't use them going forward, potentially? Or we just need to adapt and look at it slightly differently. But then coming back to gold and what we're doing with InfiniGold is we're enabling people access to an asset we believe is going to be by far and away the biggest winner out of this entire crisis. And it comes back to the fact that will people start to lose trust in the ability of governments to manage the overall supply of fiat currencies? And if that is the case, could we move back towards a gold standard potentially for currencies? And this is maybe a little bit too much conspiracy theory, but it's not that far-fetched. I know Trump actually recently nominated another Federal Reserve member who has written a number of pieces who is pro-gold standard. And when in that sort of environment, you want to have the ability to have fractional gold, be able to spend that gold in the shop. Because, if you're in a world of potential stagflation, which leads to eventually, let's just call it not hyperinflation, but 10% inflation per annum, which is a lot, right? 10% inflation per annum. Then, I think people will not be wanting to hold their net worth in US dollars or any other form of currency. They'll want to hold it something which is a store of value. Now, that may be they may spread it over lots of different types of assets, but at the end of the day, if you want something which is transactional, which is looks and feels and has proven through the test of time to be a currency as well as a store of value, then I think it's difficult for people to look too much further than gold. And that's really what we've done with both PMGT as well as Gold Pass.
Yeah, that's excellent. And I saw something that it was the only government-backed gold token in the world. Is that true?
So, again, so the answer is yes. So the answer is the PMGT is backed by Gold Pass digital certificates, and Gold Pass digital certificates have a government guarantee from the West Australian government for all gold held by the Perth Mint. So the Perth Mint is a government-owned organisation, and that means that any gold held on custody for behalf of clients benefits from a government guarantee of that gold. So, i.e., if there was a theft or the like, then besides the fact that their insurance would also be the first line of defence, behind insurance there's the government guarantee, which is something a lot of people don't really consider when they talk about tokens or digital certificates or only any form of asset under a contract. Is it's only as good as the end custodian. So, reality is there's a heap of these products out there, and I'm sure you've looked at the token ecosystem for gold, and they're a dime a dozen right now. And I look at them and sort of think, well, that's fantastic. I think everyone's trying to do the right thing, but it's only as good as the company that is behind the gold at the end of the day. Because if you own a token or you own a digital asset, which is a contract to entitlement of that underlying asset, if you turn up and it's not there, I mean, your contracts is, it doesn't matter who it was written by or what it was written by, it's no good. So we believe that the key component to all of this world in adoption is quality partnerships and working with people that can believe in the future of how commodities will be transacted, and the Perth Mint is central to that, and we believe is the best partner in the gold market.
Yeah, absolutely. I can't help but think historically, there's cycles, and some people argue that history is really just the history of war. And, thinking back to the First and Second World War, obviously America and Australia were allies. And 100 years ago, there was the Spanish flu, there was the Great Depression in America, and then World War II, and then an unprecedented growth, the baby boom generation here. And, the GI Bill introduced many Americans being able to go to college for the first time. America officially got off of the gold standard. I think it was called Bretton Woods. And, we've been in the fiat system since, the 1970s officially. You mentioned how Trump was kind of flirting with the idea of going back to the gold standard. And I don't mean to get conspiratorial either, but I think John F. Kennedy was about to issue an order to end the Federal Reserve and institute some silver certificates from the Treasury. And obviously he did not survive long enough to institute that. And then 100 years before that, Abraham Lincoln was printing greenbacks, effectively getting away from the second central bank at the time. We're now with our third in the form of the Federal Reserve. Federal in name only. It has nothing to do with the United States government officially in terms of oversight. They're pretty much a private corporation, basically. And that's not quite accurate. But I'm just, since everything is all upside down right now, a lot of people are, maybe thinking, why don't we just go back to the gold standard? What are some of the arguments against that? And is it possible to continue doing capitalism as we have? You mentioned it might be dead. Is that such a bad thing?
Yeah, it's a really good question, actually. I think there's a lot of benefits of the fiat system, and the fiat system for central governments. Reality is, what is their, their mission or their sole goal? And the sole goal is to create a lifestyle for the occupants of whatever nation, which is, improves their way of life, right, over their lifetime. And the problem, I guess, with fiat, or has been the problem with fiat, is it's been a system that's worked since the 1970s. And when I say fiat, I'm talking about the ability to control the money supply, so moving off the gold standard. And, when the governments that have that capability, they can smooth economic cycles. And we've seen that, right? We've had a number of economic cycles where the government's been able to respond and smooth out the overall impact so that, the downdraft is nowhere near as bad as it could have been. And, 2008 is probably case in point of that. 2008, you mentioned, obviously the residential real estate crisis in the US, but it had global ramifications. And, there was mass unemployment. There was a huge change in asset prices. But if the government wasn't able to respond how they did in the next, preceding 6 to 12, 18 months, and including bailouts, and, they fund those bailouts through the ability to control cash, then I think people would recognise that there are some really core benefits to what the government's role is and how they were able to facilitate that. So I think that's one thing. The second thing is being able to control the supply of cash, and, depending on whether you believe the Federal Reserve or central banks are independent of the federal government and whether they should be or not, that's another question, because particularly when you've got record debt levels at the sovereign side of things, they're effectively tied at the hip, right? Because if the Federal Reserve starts raising interest rates, then, the US is going to default because they can't service their debt unless they continually print cash. And, then you're in a vicious cycle of, printing cash to service your debt. And that is the quintessential hyperinflation. I think, going back to the point, is the government's been able to, one, smooth economic cycles, but two, allocate capital in a way through both policy as well as stimulus, so as to grow industries that, they deem to be vital to the economy. And some of the, they get to have the overarching view on that, right? Because they're not driven in theory by corporate profits. They're driven, coming back to my first point, by improving the quality of life of the individual citizens of the nation. And obviously, I say that as a collective. So I think they do have the benefit of that. Coming back to what you mentioned around, the different ebbs and flows, and, maybe it's order chaos of society, and whether that is, depressions through to, huge economic boom times or wars or whatever else it could be. I think there might be a blended approach, which may be something that comes out of this. And, I don't know if we go back to a full gold standard. I think that's, as I first pointed out, I think that's probably a conspiracy theory. I don't see that being the end game here, because generally we're trying to move forward, not backwards. But could gold play a bigger role in consumer choices as a way to hold stores of value? Definitely. Could gold be used as a currency or a global currency, and then governments have their local currency? Definitely. Could governments tax gold? That's another question. And that's a big important thing when you're considering any of these fiat currencies is, it's important that governments are taxing in their local currency, lending in their local currency. And that's where you see a lot of these sort of EM disasters when they borrow in US dollars or whatever else, and then exchange rates change and fluctuate. But I think they're the kind of the key components to what is needed for, a change in society. Capitalism, when I say capitalism is dead, I just meant that more in the factor that we're seeing divergence in what economic theory would suggest that asset values should be versus where current markets are pricing them. And that's because there's been government intervention. So if governments, change course, could capitalism come back quite quickly? Equity markets drop dramatically, or we see a large change in bankruptcies? Yes, right. But I don't think that's going to happen in the short term, because it comes back to my original point, was that, I think their sole mission right now is to, look after the the quality of life for individuals, and coronavirus has thrown a bit of a curveball at them.
Yeah, so I'd certainly agree with you. It's never quite as simple as I'd like it to be. And in speaking with you, I realize how just complicated the whole financial system is. Oftentimes I get pretty, focused in, just locally. The area, the Los Angeles metropolitan area is, close to 30 million people. And I think that's almost, I don't know, it's got to be close to, how many people live in Australia? Do you know?
Yeah, it's 25 million. So it's bigger than Australia.
Yeah, that's crazy to me because, it might be a little bit less than that here. But definitely the state of California, just this little chunk of land, it's as far west as you can go. And sometimes we forget about, or I should say I forget about, the rest of the world. They're still developing countries. There's implications where people may starve. The UN was putting out figures, over 100 million people may die from starvation because of the economic fallout of what's happening due to the coronavirus. And that's truly terrible. Maybe I'm a bit too romantic with the old ways of things. There's a reason why we are progressing, and I think we should progress. But, I also think we should use technology to help us. And, it seems like sometimes we're a little bit resistant to change. I don't know if that's a result of policy taking time in governments. Obviously these things need to be regulated, whether or not that's a good thing. Some people disagree with me, but I think it's very, very helpful to aid with adoption. But I'm a big fan of cryptocurrency, and I like the idea of gold. I like what you were talking about, how that may play a new role in the global economy. You mentioned people might be more hesitant towards real estate and, look for other places to put their money. And I can't help but think, what about those people who are not fortunate enough to own assets? What about the people who are, like me, planting a crisis garden in the backyard just in case? I think I'm part of the 1% globally because, I'm not starving, but I'm definitely not part of the 1% in America. So for those listening who may be out of work, who may be a little bit depressed right now, is there room for them with what you're talking about? Like, the expression "pulling yourself up by your bootstraps." Do you have any advice for people who would like to eventually start owning some assets and help their future generations by leaving money to them? What are some good practices to build wealth in this new era? I don't even know what else to call it.
Yeah, this is an interesting one. So this is something that worries me a lot, and I guess what you're getting to is the wealth gap. So the wealth gap in the US, and I can talk to that a little bit, has been widening for really the last 15, 20 years, right? And that's because of free money. And what I mean by free money is that the wealthy get access to credit and at very cheap levels of debt. And generally speaking, the 99% don't get access to that, right? Like they struggle to get access to debt. And what happens when you have free money is asset prices double, triple, quadruple. And that's what we've seen in global equity markets in the last 10 years, right? And, I was actually just looking at the equity market last night. It's up 2.6%. And to give you some context to that, you've got, multi-billionaires, and, you're coming back to that first point around, you said, where did the stimulus go? A number of the biggest stimulus packages actually went to hedge funds, right? Initially, it didn't go to small businesses in the US. They went to major hedge funds. And I won't say which names, but you can look them up and see where they went. So there was clearly a case of, I think, backstopping the investment community first, one. Two, the investment community has been benefiting largely from free capital or free debt for at least the last 10 years. And when you have something like the equity market up 2.6%, which is what the S&P was today, or yesterday in Australia, but today in the US, if someone's borrowing 90 cents in the dollar and they're putting it in the equity market, their leverage return is not 2.66%. It's, I don't know the exact math of my head, but it's 10, 12, 15%, right? It's a much bigger factor than that. So they're able to benefit dramatically from higher asset prices, which comes back to this money supply situation. Then if you're continually printing cash and you're devaluing fiat currencies and asset prices continue to go higher. And I would say I'm not bearish on real estate at all. I'm a bit concerned about it in the short term, but if you're continually increasing money supply, then all those assets, like hard assets in general, would appreciate in value just from an inflationary standpoint. So those kinds of considerations is something that I would always think about as a investor, but also as an individual. And when you sort of talk to what would you do if you're in a situation where you're starting from scratch, right? Well, capital is king. And I think capital is king in the fact that capital is king, and obviously I'm not giving financial advice, but I wouldn't be witnessing, my idea would be not to be having cash in the bank. It would be looking for assets that you think are going to appreciate given the environment that you believe in. And if you believe, what we've been talking about, that we're going to continue to see increasing money supplies and a devaluation of fiat currency, then we want to be looking at hard assets. It always sounds a bit silly or trivial, but small steps are key in this. Compound interest, and you should look it up. But if you know what compound interest is, you understand that $1 today is worth a lot more than $1 tomorrow. And if you have the ability to put $1 aside today and invest that $1, and then tomorrow add $1, and then the day after that, you don't have $3 invested in 3 days, right? Because your return has been compounding and it increases exponentially over time. So, don't wait for the future and think, I'll spend today and look to, build my nest egg in 10, 15 years from today. I would always think that, getting involved, or at least starting to think about your assets and your position is the way to play it. And, as I said before, I'm not trying to give anyone any financial advice, but, that's how I think about it from a personal perspective.
Yeah, I appreciate that. Thank you. I'm sure there's a lot of people listening right now that, it's good to hear. So, I know that, this is the blockchain show, and I was, intending to ask you questions specifically about the, the technology, but, we've got a lot of listeners who are interested in fintech. So I think this might be of interest to them. We've been doing episodes going deep on the technology the last eight or 9 episodes. So it's kind of refreshing just to take a step back and look at where we are as a species. I mean, this is a global situation like I have never, witnessed before. So it's definitely humbling. It makes me grateful that we have these technologies, kind of running on blockchain that can be sort of like these intermediaries between different governments or different countries. I like what you said about borrowing money and paying it back in the local currency. I think that's something I like about the world, is that there's distinct different cultures, there's different languages, there's different currencies, it's just something that, I don't know, maybe I'm getting a little too sentimental here, but, this whole situation is still unfolding, and we're not, I don't know, it doesn't look that good, but I'm still hopeful. I'm just curious to get your take here on, well, first of all, who can utilize the Perth Mint token? Is it only people in Australia? And do you see this being almost like a financial revolution to help deliver people out of some situations that might otherwise have had them locked into their government or their country's situation? Like, say if there's a bad depression in one country, but people are able to get their money out in time into something like the Perth Mint token. Is that going to be an option globally, or is this only more of like a regional solution?
So PMGT, the token is available actually predominantly everywhere in the world outside of the US right now, interesting enough. So and it's because of the treatment of the underlying assets. So PMGT, we have legal opinions that it is a physical commodity, in Australia, Asia, and Europe. We're working on the US, and there's going to be some announcements about that shortly. In essence, what PMGT allows you to do, and you can trade it right now on KuCoin, is it allows you to own physical gold. You can convert that physical gold into a digital certificate with Gold Pass. So you can download the app on the App Store called Perth Mint Gold Pass. And when you own a PMGT, you can transfer between Gold Pass digital certificates and PMGT seamlessly and for free anytime you want. And the reason you would convert to Gold Pass digital certificates is if you wanted to physically redeem or you just wanted to sell your gold back to the Perth Mint. And that's a really important factor versus other tokens out there in the world, is because we actually have 24/7 liquidity on our token provided by the Perth Mint because you have that ability to transfer between PMGT and Gold Pass digital certificates. And what I mean by that is all the other gold tokens out there are reliant on exchange liquidity, right? They're reliant on some market maker providing a price on some exchange somewhere in the world, right? In essence, what ours is you can buy that token, you can buy it off KuCoin, as mentioned before, and you now have direct exposure to effectively the interbank gold market. And what I mean by that is it's the generally tracked XAU market in gold. You can then, if you say you bought, I don't know, $100,000, $5,000, $500, or even $500 million, regardless what liquidity is shown to you on KuCoin, you can always get out of that token by converting back into Gold Pass digital certificates, and there is a 24/7 stream price by the Perth Mint to sell your gold back to them or to buy more gold in digital certificate formats. You also have the ability to take physical delivery. So within the app, you can elect to take physical, and they'll send that gold to you wherever in the world by Brinks or FedEx, etc. So it's quite unique functionality, and having that backstop and liquidity means that, I think versus other offerings is a really unique selling point because we're not reliant on, I guess, a number of market makers in the crypto space always being there to facilitate you getting in and out of your position. There is always the ability to get in and out of your position. For people who look at it as a way to spend, we're working with a number of wallet providers right now to incorporate PMGT into the digital wallets. A couple have already been done. And that obviously means that when you buy your PMGT, you can put that into your digital wallet and you get a debit card, MasterCard, Visa, etc. And you can go spend your PMGT at the shop. So we're trying to create a universe where people could hold a percentage of their net worth in gold, in PMGT. They can use that net worth as a currency. They can spend it in a shop via their debit card. Or if they don't want to own it in a token format, they want to take physical, they can effectively redeem it into physical and have it sent to them in the world. So, yeah, I think we're trying to enable a lot of that functionality that enables growth, I guess, in a gold ecosystem.
Wow, man, that's impressive. I think that the term that comes to mind is a hybrid. I don't know if that's an accurate term. You're not particularly married to blockchain technology as well. I mean, you guys have dealings with traditional markets. Is that true?
That's right. So the company. So there's two websites for listeners who may be interested, but there's infinigold.com as well as PMGT.io. PMGT.io is our token, so our Perth Mint Gold token, which is what I was talking about before. InfiniGold.com is the company. The company is obviously the issuer of the token, but we build effectively digital commodity solutions for commodity partners around the world. And what I mean by that is we use that technology that we were talking about originally, which is the DigiCash cryptographically secured central ledger solution, which allows any commodity supply chain partner to buy, sell, redeem, or transfer peer-to-peer within a closed-loop system a physical asset. which is obviously it's patent technology that we own through a perpetual license, and it's it's something that we believe we're developing and improving the efficiency of commodity capital markets. And I'll come back to my first point when you asked me for an introduction, but InfiniGold is incubated out of the CMCRC, which is now known as Rosetta Institute, but the CMCRC is a research institute which is all about improving market efficiencies. And we see tokens as a market efficiency improvement, right? We see it, and obviously, we're backed by a government organisation, being the Perth Mint, and coming out of a research institute which has government funding. So we clearly see tokens as the future. We also see other solutions as the future. We don't limit ourselves to thinking, one or all in on tokens. We think, the public blockchain is fantastic for some use cases. However, there's other solutions and steps that need to sort of happen that we believe we can improve commodity markets with, and that's where we're working towards.
That's excellent, Jon. This has been educational. I know I kept you a lot longer than 30 minutes, so I appreciate you taking the time to explain this to us. Just a really good conversation. Appreciate you taking the time to schedule this with me. I know that the time change, it was a little bit of a challenge to find a time that would work. So, thanks again. Just in closing, if you would please give us, some final thoughts, and please be sure to tell us again where we can go to learn more and potentially get involved.
Yeah, sure. So we have a Telegram chat room for PMGT, which you can look up and join if you want to talk to our head of trading around the markets. He's on that, and he is commonly sort of giving market updates. There's also the ability to subscribe to the market newsletters on PMGT, which is what the market's up to. And this is more around price action of gold, but also around different developments and onboardings that we're doing with the token. If you want to look at the company more in general, infinigold.com, you can just go to the website there and reach out to us, and happy to talk to anyone about anything. So,
well, excellent, Jon. This has been an absolute pleasure talking with you today. Thank you so much for your time.